Yeah, it's fun.
Sweet. All right, calm. Let's talk about liquidity. All right, so everyone here went through those 3 lessons, yeah? Where does, the majority of liquidity rest?
Equal highs, equal lows, isn't it?
Equal, yeah. They don't have to be equal, but highs and lows.
But more like equal.
So yeah, so the reason of the idea of equal highs, yeah, it's just this, innit? We know every single high has liquidity, innit? We know every single high has a liquidity pool, yeah, and every single low has liquidity as well.
Yeah.
So if there's equal highs, it's 2 pairs of liquidity.
2 lots of
yeah.
Yeah.
Do you see my point? So that's going to be a more significant liquidity pool now. Likewise, if there's a low compared to an equal low, right? That's going to be a significant. Whoa. Just mute all of these that make noise. It's not in a rude way as well, but maybe they're not aware of that they're making noise.
No.
So liquidity rests at the highs and the lows, right? That's from a trading perspective. We know that because this is where people look to enter and exit the market, right?
Yeah.
Now, we need to also consider it from a level of commerce, right? You see, I'm going to do this just once. You see, like whole levels here. Round this up to just 1 parity, yeah? Just round this up to 1. You see at these big figures and these mid figures, there is a lot of commerce that occurs at these levels, right? Now, what do I mean by commerce? There's actual transactions, foreign exchange transactions that happen, because when you start trading forex, you come down to this assumption that this market is just for traders that are trading. It doesn't exist anything else in it, but that's not true. The main thing why the forex market exists here is because of what globalization is. The fact that this is other countries, like other businesses can go to other countries, like a French company can go to like a UK country and set up and whatnot. And when these things happen, there needs to be foreign exchange that occurs so that they can change euros into pounds. Exactly. Do you see my point? That's the main thing. That's commerce. This is what I mean by commerce, right? Imports, exports, whatnot. When there's an exchange for like these actual large companies, they need to actually have a foreign exchange settlement that happens. Now, where are their prices likely to get fixed at? Because they get fixed. These prices get fixed for them. Do you see my point? They'll get fixed, especially if it's very significant. Now, what levels do you think it makes sense for them to get fixed at? Whole numbers, mid-figure numbers, right? The ease of them doing business and the ease of their transactions, their transparency cost is what it's called economically, decreases at these whole figures and these mid figures. For example, at 99447, it just makes more sense to do 995. Do you see my point, right?
Yeah.
That's what I mean. Now, these, right, consider these as areas for liquidity as well. They may not look like a high, they may not look like a liquidity pool, but they are. Now, why are they? What is liquidity? Just what is it? It's the what?
Orders in it, like
the orders. Now, discussing what we just discussed, what do you think lies at these mid figures and these whole
points,
numbers?
There's going to be orders in it.
Exactly, they're going to be actual large orders, like real orders, right?
Real life person orders in it.
Yeah, exactly. That's why these mid figures and these whole numbers are very significant. You'll see a lot of the times where I consider a price level, I'll always round it to a whole or mid figure, especially when I give you guys a target to look at, or perhaps an area to eye up on the higher time frame. I always say consider the levels with the whole numbers and the mid figures. Those are the most reliable areas if an array exists within it. You see how we have like this candle, right? This candle 99, right? Now there's also the 20 and the 80 level that's covered in a different weekly commentary. You want in your array that you're considering, you want a 20, 50, 80 or mid figure or 00 level to exist within your array. That is like a confirmation that, you know, it's a more reliable price array to take. Any questions?
No.
Say that again one more time. I didn't hear it properly.
Which part?
Just about you said 20, 80, and more.
Okay, 20. Yeah. So 20. So for example, 99.20, 99.50, 99.80, and then the 00 number. So that'll be the next one will be 1, right? So for example, so 99 is here, yeah, 0.99. Then 99.20, 99.50, 99.80, and then you got 1, right?
Yeah.
Those levels, you want to see your price arrays, the higher time frame price arrays that you're framing trades off of, have those levels within them. That shows that is to me, that's a very reliable, especially when you see when you see a fair value gap from that area, like a displacement away from it. It shows there was, a large transaction taken at that spot in the market. That's what imbalance shows in the market. That's why it's created, right? That is just a telltale sign that price, if there's a retracement into it, so let's say there was a retracement into the 1, right? What was the level here? Was it 80? No, so it was very close to the 80, 99.791, right? This candle was high, the FOMC of yesterday. When you run into those areas and you displace away from it, think of it like price was fixed there and it's finished and displaced away. Do you get what I mean?
Yeah.
Yeah, cool. Where else, other than highs and lows, right? Other than highs, lows, and what we discussed now, where else could liquidity rest? Just think of retail.
Like, I'm actually nah.
Someone was saying it.
Well, I was about to say like trend lines.
Yeah, trend line. Exactly. So if we consider, this, if you consider something like that, right?
Yeah.
There's a misconception again, right? I mean, I always say there's a misconception is because 90% of traders lose and then they go on to teach you bullshit on YouTube, innit?
Yeah.
What they say is this, yeah. Do you know they say that the banks are trading and they're creating these order blocks and whatnot? No bank trades smart money. Even the bank, the way that the order block forms and whatnot. It's not a bank doing it. It's the algorithmic delivery. It's the signature of the algorithm delivering price. There is no bank creating none of this shit. That's what people misunderstand. The majority of institutions, financial institutions, besides the interbank, right? They trade, majority of the time, it's the retail approach. They believe in the idea of strength and they believe in the idea of weakness. And they'll use support and resistance, or key levels, as they like to call it, to solidify, this idea. Now, a trend line is a very common retail, like tool that they use, right? Now, what do they believe? They believe in it as like a dynamic resistance or some bullshit like that. Now, what do they believe in here? They believe that, it's holding like this, so I'm gonna take buys so they'll just stretch this like out.
As long as it respects that.
They'll stretch it out like that, and they'll say, oh, the next bounce I'm gonna get, I'm gonna take a trade off of it. That's how they trade as well. So what do you think is resting under this trend line?
Stops and that, innit?
Stops, exactly, right? Because what do they believe in? Oh, if the trend line breaks, then
break it, innit?
Exactly. For example, you see that there's a clear trend line forming like along here, innit? Yeah. This was something that I was eyeing up, right? I think we said it on the Telegram chat. I'm not too sure. I'm pretty sure we said it yesterday on the FOMC. You see like this in it. You see retail is gonna view that like a trend line, right? Yeah. You see when the trend line is in line with your bias, like you see like here, because we're looking overall for shorts on the euro, isn't it?
Yeah.
You know what you need to wait for when you see a clear trend line form. Wait for the disruption of it, like this.
Like that, yeah.
Yeah. Wait for the run on it, because you see what retail traders do in it. don't think of stop losses. Think of breakouts. They believe, yeah, oh, if we break above this,
Then it's gonna go into buys.
it's gonna keep on going, and I want to
Yeah.
get on the breakout. And do you know what they'll do in it? They'll do some bullshit. I don't know how many, you guys use TikTok. I don't really have TikTok, but they'll believe that something like this. They'll do this, or it can possibly come up in here and do this, or why is this doing? So they'll say, oh, trend line coming up to here and then here, right? Or we can go like this, retest on the trend line, and then go here. That's what they do, innit?
Yeah.
That's what they do. Now, do you see how this run on it collapsed at both sides?
Yeah, it takes the liquidity, then have it on going down, and hitting the stop losses.
So trend lines and also any chart patterns as well. The specific chart patterns, okay, double tops and double bottoms, that goes into our highs and lows because they're highs and they are lows, right? Now, there's something called a head and shoulders phantom. So you know what? So you know the run, like this trend line. This is called a trend line phantom. There was a trend line. The phantom runs it, and then it carries on running lower. You know what head and shoulders is like this, isn't it?
I've heard it mentioned, to be honest. Oh yeah. And then
The retail, yeah, like this, isn't it?
Yeah.
Now you know what happens there. You see these people, retail traders, they try to trade it like this, isn't it? They go to this neckline. You see, like here.
Yeah.
And they'll try to trade it like this, essentially, isn't it? When you see a head and shoulders that's not in line with your bias, yeah, like it's clearly a retail trap. This is something that was taught to me. I don't really like it because I don't see it as much. I don't really like to view chart patterns as forms of liquidity, but I'm still making you lot aware of it. What will happen is it comes up here. People are gonna take positions of that because institutions trade these. Like these are the head and shoulders, the double tops, double bottoms. That's like the triad of like retail chart patterns. Instead of going up here, because the thing is, yeah, the reason why this is catching them off guard is because the higher time frame context is bullish. Do you see my point? This doesn't make sense. So their retail is going to be prone for shorts, and what it does is it comes up here instead and does that. Kind of like what happened with FOMC yesterday.
Oh yeah.
Yeah. Now, why is the idea of liquidity? Why do you lot think it's important to know?
Because you can see where the market's going to deliver to, ain't it really?
That's important, but what do you need for for your trade? What do you need?
Bias.
You need a counterparty, right?
Like opposing
Oh.
You need the counterparty. Now, we don't need the counterparty to our trades, right? Remember, it's not us moving the market, but smart money, the more informed traders, they need a counterparty to their trade. Do you see my point? Now, what we're doing is we're just using their methodology, we're just using their style, and we're just getting in line with them. Do you see my point?
Yeah.
Because what they're going to do is this high, if I just get rid of this, you see, if I get rid of this trend line as well, you see like this high, you see when we run above it, buy stops are triggered in, right? For them to offload a short position, because who remembers the COT data? We were touching on the COT 30. Were you keeping an eye on the COT data? I know Binance was. I don't know if Binance is in here. I think he might have work. Anyway, the COT data, right? What it was showing you, you see in this move higher, you see especially when we were like here and above this high, commercials, right? The big funds, they were placing in a net short position. So think of it. Buy stops were triggered into the market, and this is a daily time frame. This high was run, buy stops are triggered in. The actual big funded smart money traders are placing a overall short position into the market. So what do you think that this run on the high was useful?
To bait people into thinking market structure shift, like we're doing reverse and they're going back up.
Exactly, because look, they're net short. They're trying to build a short position, but they need the counterparty Do you see my
Yeah,
point? They can't
they
just
need
sell
buyers
like
for them to
us.
shorten it.
Yeah, they can't. They don't have the luxury to just buy and sell off like an MT4 like us. They need a literal counterparty to the market. Do you see my point?
Okay.
Now, if you look at the COT data, which is in chapter 5, lesson 1, you'll see that a lot of times the commercial is going one way and hedge funds and the retail institutions are going the opposite way. You'll see that happens a lot because the commercials is using them for their liquidity, right? Now, when from the COT data, that's how you can identify this as well. And that was the reason why I was saying that's not a market structure shift. The net short is building up and we're doing a run on a high. It's telling you that this is just going to be, it's a fade of the high. It's a turtle soup run on stops, right? When that high is taken out, those buy stops are being paired with smart money short positions. How can you tell with smart money short positions? Look at how, let's go to like a 3-day now. Let's go 3. Look at the displacement after you run the high, right? Look at when you run the high, right? This is that high, yeah? It's that high there. You run the high and then look at what's happening. The displacement away from it. That shows the buys, right? The buy stops there were just used for smart money pairing their short positions. Likewise on the DXY, if we go to the daily, we ran that low. I wanted to see the run into heel, right? But it wasn't going to come in line with FOMC. The reason was because we're lining up the move of FOMC. We ran this low and we're displacing away from it. We're getting above this candle. We broke that candle's high, right? What does that show? This low was just used for
To be the counterparty.
the counterparty to smart money longs on the dollar.
Oh yeah,
Now this is how controlled the market is. This low here, the run before, right? The week before FOMC, allowing what had to happen. Smart money to accumulate long positions under this low where there's a lot of winning sellers. So there's loads of people selling here. That's allowing smart money to accumulate a long position on the dollar. Up until what specific news driver that happened? What news driver just happened yesterday?
FOMC.
Exactly, right? This is how you frame liquidity with time, in the market. This is an example using FOMC. You ran a sell-side liquidity pool. Overall bullish narrative for the dollar. We're expecting high prices. Now, you had a low and you ran the low prior to a reason to push price, right? FOMC. You ran under the low and there's sell stops beneath that low. Those sell stops in the low get paired with smart money long positions in the market just before FOMC. Now, take this idea into your intraday. If you just have a news event in New York at 1:30, you're bullish, you run lower, take out a low before the news event, and now you're starting to, consolidate and you're starting to, chop your way higher. What do you think that low was used for?
To create like sell orders so they can buy in it.
Exactly, the counterparty. This is how you have to frame liquidity. All it is. And now, who's done chapter 3, lesson 1?
Market making.
Yeah, how many of you done that one? None of you.
I've done it. Obviously, I finished it.
Yeah, done it.
What do I say every single day you need to wait for when you're intraday trading?
Candles are closed.
You're waiting for the market making. Remember, this is purely from a market making perspective. There was no technicals taught in that.
We're on liquidity.
You need the opposing side of liquidity in the market, right?
Yeah.
So when you're bullish, what do you need to wait for?
I run on sell stops.
Lows to get taken out.
A run on sell stops, right? When you're bearish, what do you need?
Run on buy stops.
A run on buy stops. So we're bullish on the DXY. Think of this as a 5-minute chart now, right? Think of this as a 5-minute chart now, yeah? There was a run on this low. Forget it's a daily. There's a run on this low in a bullish day. you're anticipating it to be a bullish day. We ran that low. Where do you think the candles are going to print?
After it's taken it, innit?
After, no, but we've taken this low now. We're here. Where do you think
Yeah.
after
Higher.
the candles are going to print higher?
Oh.
Right? You see, this is the thing, innit? Start trying to program your mind into thinking like this, yeah? Make a note of this. One sec. Let's write it down together. One sec.
Oh, you get my fucking pen and paper.
Let's write it together. Know where price is, where it came from, where it's likely to go. If you just use this 3-step thing, yeah, if you use this, you will have a lot more success in your trading. If you, every single time you're on the chart and this is the first thing you think of, you will start to build a stronger bias. The reason is this. Know where price came from. Here, when we're here, where did price come from? Underneath this low. What's at that low? Sell stops, and they've been paired with buy stops in the bullish narrative, right? So where we know price is here, where it came from. So where is it likely to go now?
Double top.
To the tops. So now you should expect the candles on this chart to print where?
Oh, yeah?
And that's how you derive a bias. That's it. And that's all I've done in the weekly commentaries. You can, you know, if you want, yeah, if you finish the mentorship, watch, forget the lessons, watch weekly commentaries 1 to wherever we were, and you'll see exactly, because you see when, if you watch it, just weekly commentaries one after the other, you'll literally see me predicting the next candle over and over and over and over again. If you just watch the first 10 minutes of every single weekly commentary, you'll see how I use this. I don't say this, but this is the methodology that I use. I use this to predict the next candle every single time. And it's only way you can know this. When you can't know this, guess what you do?
You sit, like sit out, innit?
You sit out.
Yeah.
I'm thinking of making two more lessons for you lot when I find the time. They're gonna be just called bonus videos, innit? The first video lesson is gonna be how the swing trading mindset complements the day trader. Because if you could swing trade, all you need to think of the daily is this, yeah. Where would you look to enter long on the daily chart? Wait for the daily to get there, and you have now found your bias. Number one, it's that simple, right? Number two, the second video is gonna be the open, high, low, close, just more in depth. Yeah, it's simple, because the thing is, right, you see a lot of it is complicated. It's only simple once you learn these things. You see, everything is simple. Once you learn it, you're gonna be like, oh, everything is simple. Everything after you learn all the technicals is gonna be molded into one simple plan. But that simplicity only comes after you finish the complexity, innit? Do you get my
Yeah.
point? Now, about liquidity. When do you think liquidity is going to be delivered within the day?
Kill zones.
The kill zones, right? So if you're outside the kill zone and there is no news driver like FOMC that's outside the kill zone, are you anticipating a run on the high or the low?
No.
So if you happen to hold a trade outside of the kill zone, should you be holding for the high or the low?
No, it could be like generating more like.
I shouldn't.
You shouldn't, right? Because you see like this, yeah, where is it likely to go? This can be, refined. Where is the next likely place it's likely to go? Because we can say it's going to go here, but should we hold for there? Should we work to our way towards there first? No, you have to look at the checkpoints. This high, these highs, I should say, right? You have this candle, and then you have the high. Why do I say this candle? What's this candle? Someone say in the chat. Yeah, exactly.
Exactly.
Someone's mic is like buzzing.
Yusuf case or something like that.
Remember, you're working before the high, you're working your way up the PD array matrix, right? So even this kind like order blocks, fair value gaps, you have to consider the moves into there before working your way to the high. Do you see my point?
Yeah, like you said, checkpoints in it.
Exactly. Anyone have any questions?
Not directly related to that, but I've got something that I've been like curious about. For a while, I've heard you talking about like a document thing, but I think I must have missed the conversation where like you announced it because I don't know what the fuck this document's meant to be about. I just know you wrote something.
Yeah, it's actually nearly done if I'm honest. One sec.
Yeah, I've been hearing people like you mention it and people talk about it, but like I must have missed the chat where like
It's this one, innit? This one, innit? I think it's this. Yeah, it's basically just gonna be. It's not just about the algorithmic side. It's about my entire journey, and basically the title of it is called "How You Lot Decided," and all the guys inventors how Omar met the algorithm, innit?
oh, swear it's like a little biography or something.
Yeah, it's like that, and it's gonna have all those things I used to learn. But I'll
Yeah,
be
all the
honest.
stages.
I'll be honest with you guys. I'm kind of iffy to share it. It's nearly done. It's it's not long left. Pretty much finishing touches and a reread. But that information should not be public. If I'm honest.
Yeah, don't worry about it. It's not public. It's in a closed group, so don't worry about it.
Of course, but I mean, pictures can be taken from like desk, like like from your phone to to the Word document and
Yeah,
shared whatnot. But I will take the chance, and it's all right. Anyone else have any questions?
I think that's it.
If not, we're just gonna wrap it up because do you know what it is? I know a lot of times you come, we talk whatever, but
we've
you know
covered
the ones that are recorded, yeah, because I don't want it to be waffle for the people when they watch on the recording. Do you see my point?
Oh yeah.
So I want it just to be focused on the topic, which is
Oh
liquidity.
yeah. So someone in chat just said that. Put like a big fucking watermark on your document.
Oh yeah. I'm gonna watermark the absolute shit of it. I'm gonna walk.
Got like you linked to the free group
30,
every fucking
30,
couple like
30.
lines and that.
Share it to the first 50 guys only because you're one of the first 50 guys.
No. I don't like that one.
Anyone else got any questions to do with liquidity? Just a reminder, because all of you are making your way through the content, yeah. In terms of asking questions, yeah, I recommend doing it like this, just so it's easier for both of us. A lot of questions are answered in later on videos. It's best to do it like this. Watch each, in chapters 1 and chapters 3 and 4, watch every single video in the chapter and then ask questions when you're stuck after it, after each chapter. In chapter 2, the way we do it is this, and I say it in the videos all the time. After every single video, show me 5 examples of every price array that I show you in the video. So 5 mitigation blocks, and then I'll green light you to move on to the next one. Then 5 breaker blocks, and then I'll tell you, okay, move on to the next one. Then order blocks, imbalance, rejection blocks, etc., etc. That's so I know that you aren't messing about with the price arrays and that you're getting right. Because if you get those wrong, you're gonna have a very tough time trading. Because your reference points, your price, you're gonna have the wrong reference points. Do you see my point? Then
Yeah.
what are you going to be trading off of? The wrong candles. Oh, yeah. Okay, OTE. Sweet. Okay, this is the last point, then we'll wrap it up. So how I taught you guys optimal trade entries essentially like this. Let's say you have let's just use this low. Right. We just understand it from a low to a high. But essentially the optimal trade entry, do you know what the optimal trade entry does? This is the methodology I use it, right? Optimal trade entry is when you have a reference point to price that should hold. Make notes of this or when you rewatch this video. You use the optimal trade entry, right? When you see a reference point in price and you think, okay, this is an anchor point, which should hold. For example, if you have a market structure shift in line with your bias, you're anticipating, the point of the market structure shift to hold, isn't it? The run on stops essentially before the market structure shift to hold, right? Now, any reference point in price which you believe should hold, draw your OTE from there. I'll show you an example. In this context, yeah, let's just say for this reason, let's say this fair value gap. Yeah, you see this fair value gap. Everyone identifies this as a fair value gap. Yeah, from this candle's high to this candle's low, fair value gap. Do you want to see the fair value gap, fully close, or do you want to see the order block hold? Based off of where you believe, where your conviction is, price should not exceed, draw the OTE from there. So if you believe that this fair value gap should hold, get optimal trade entry to the fair value gap. That is how you can use the OTE as well.
That was a good example, so I like that one.
Anyone have any questions on that? The best OTE I have, I think I gave an OTE cheat. I think I had an OTE cheat sheet. Does anyone have that? I know I sent it to you.
I have that in my journal.
Yeah, could you send it into the Telegram chat, please, bro?
All right, cool, nice.
Thank you. Have a look at that. It's the OTE cheat sheet is basically like this. We use this. So let's say you have it's a bearish market, you have a high here, then you run it, and then you have here. And then let's say you have a low here, yeah? And it just moves lower. And you have plenty of time left in the kill zone, and you have a news event, a reason where price can have an aggressive swing. Oh crap. Yeah, like that. With the OTE, have it like this, yeah. Is where I drew my OTE in a place where price should not exceed. Is there a liquidity pool to run before it enters the premium for my OTE short or my discount for my OTE long? Cheat sheet for OTE. That's the two. Have those two things. A reference point to price. Yeah, this is your OTE. Make a note of this. A reference point in price that should not be exceeded. A liquidity pool to feed my entry. So what does that mean? We have this short-term low, right? Do we have a low which can be ran, right, to OTE my premium to continue the move on, or my discount? That's it. A liquidity pool, a reference point in price that should hold, OTE. That's a lot of what I base my trading off of. It can get way more complex. You see the OTE, because all of these things are dynamic. I'm not teaching you fixed models. You see what I just taught you now? Is that a static model, what I taught you? Or is it something which needs characteristics? You need a reference.
I sent in the telechat, yeah.
Thank you very much, bro. You need a reference point to price and a liquidity pool to feed it. That could look different every single time. You can have 5 of those and they can all 5 of them look different. It's not a static model. This is what I mean. Now, there is something very techie that I can get with this. I'm still practicing it myself, if I'm honest. It's the open, high, low, close with the OTE on every single candle. So on a 5-minute chart, OTing every single candle. But it's not for the faint-hearted. Let me check the chat. Context with characteristics. Exactly, I mean, exactly that. Any questions on the OTE or the liquidity?
I think we're good.
You're all good, yeah?
39
people. All right, I'll give it a minute. See if anyone comes up with a question in the chat, because not everyone's comfortable to speak on the mic. I know that. Innit?
Oh yeah, they use a little chat thing still.
Anyone got any other plan for the next potential Zoom? Or we could go back to, chapter 2 Zooms, chapter 3 Zooms, chapter 4 Zooms if you want. Like we used to do it like this, innit? A day dedicated to chapter 2, 3, and 4. so that anyone that has questions on chapters 2, 3, and 4, just come into that Zoom, ask the questions, Q&A session. We could do that if you want. For like chapter 2 is very needed because a lot of the times people ask me the difference between a mitigation block and a breaker block. That's probably the most common question. Chapter 3 is very technical as well in terms of a lot of blending with weekly profiling, daily profiling, etc. No questions, yeah?
Someone just said, can we do a Zoom on backtesting?
There's an entire lesson on backtesting. Now, backtesting is, see it like this. Backtesting is like practicing a sport. Wait, Andrew, which lesson for which one? There is a lesson for yeah, because what you're doing is it's not for cherry picking entries. That's the misconception of backtesting. When you cool. How many of you lot kickball, play football? When you play football, do you practice doing 5-star skill moves on a? Let's say you're a legitimate football player. Do they practice doing 5-star skill moves on the pitch, or do they practice doing long shots goal to goal? No, they practice what they are gonna do, the realistic stuff. Exactly, they don't do that. Now, this is what the average trader does when they backtest. What they do is this: they go and they cherry pick every single high risk to reward trade that came, or they look at every single entry point. I could have got here, I could have got there. They look at all that dumb stuff. What you need to do is this: you're going to practice, and this is what footballers and any other basketball player, whatever sport it is, right? They practice skills which are going to help them perform in game, in real time. You agree or not?
Yeah.
Yeah. They practice the skills that are going to help them in the real game in the future. So what do? You do the same thing. You're going to practice collecting data. You see the thing is, yeah, the mentorship is a spoon feed to the ones that want it to be spoon feeding, but it's a push in a direction on how to become a studier for the ones that look at that, right? Because you see chapter 3, the first 2 homeworks that I got you to do, they're big homeworks. Like, they're not big to me, but maybe to you guys, you never had a backtest like that, and you've never even considered doing things like that.
Did you just say chapter 3? Sorry.
Yeah, chapter 3, lessons 2 and 3.
When you got us to go back through like with the weeks, like when it took the high and
The
the
weekly
low.
profiling and the daily profiling. Yeah, the higher the low of the week and the higher the low of the day. And I told you, do it for every single week of the year and do it for every single day for like at least 6 months. Now, what about if you do that every single day? You know, if you do that every single day, you add to the data that you already have. Because I know most of you left it. Some of you haven't, right? If you it's the truth though. I know it's the truth. You've done it.
I'll be honest, I didn't do a whole year, but I've already go on TradingView and look for a few examples. And
but the thing is, the honest truth is, the honest truth is, it's only gonna hinder yourself, because the reason is I didn't give the homework to be mean, innit?
Yeah.
Do you see my point? I didn't give it. Oh, let me just.
It's because it's gonna improve it.
Because I know the benefits of it. Do you see my point?
Yeah.
Now, it's up to you if you want to take the benefit upon yourself. That's number 1, yeah? Number 2, I know the benefit of it. And I know the people that actually do it and the people that actively take this and say, raw, I can just go and do more days. I can go do more weeks. It's like, you know, when you try and squeeze out reps or you push more reps in the gym. Do you know what I'm saying? You know, when people say, I'm going to do 10 reps, they come to 10 reps and they say, now I've got 15. I'm going to push to 15.
Oh, yeah.
The people that go hard in the gym, those are the guys that get results. Firstly, it's the same thing in any other form of anything, education or training or whatever it is. The people that put in more effort and more, work in, they get better output because their input is better.
Yeah.
Add to those, if you go every single week, yeah, and you just add the high of the week made here on a bearish week and the low in a bearish week, this week was bearish, high of the week was made here, low of the week was made here, extra comment section, news event was a catalyst of the high of the week, whatever. Do that for 6 months, yeah, and tell me you won't be able to know and anticipate the high of the week and the low of the week in the bearish and bullish week, and tell me that you don't. And if you do it for every single day, you can't tell me that after 6 months you won't have a greater understanding of when the low and the high of the day is going to be made, given it's a bullish or bearish day. Do you know what? If once you do all of that and you know all of these things, the rest is easy for you. Determine your bias. Because if you don't know all of these things, then do you know what you're gonna have to do? You're gonna have to determine your bias. And then critically think, okay, where's the high and the low of the day, this array, that array, whatever. But doing all these homeworks, knowing all these things, like is, it's just muscle memory. The
Yeah,
only
just
thing
come
you have left
naturally,
to do as a trader is then what's the bias for the next day. Then you know from your profiling where the high and the low of the day is likely to be. If there's a news event, you know likely what the news event is gonna likely to do. But you don't want to do these things though. This is the stuff, yeah, and I'm happy this is on the recording. This is the stuff that will take you to the next level. Every single day, right? If you just do more backtesting, this is real backtesting, getting data on your side, because now cherry picking that setup isn't going to do shit for you. That same price action that you cherry picked is not going to form every single day, but getting the data when the high and the lows or the weeks and the days are likely to form, that's going to be forever. You can use that because now that understanding, right, is going to relay into the future for you. That's what you need to do. That's how you need to treat your backtesting. See it like this: what can I collect to help me improve for my anticipation of how price is going to print? Quote that. What data did you get from this DXY chart? I'm not too sure what you mean, CEO.
he wants your bias.
Oh, but we said it in the weekly commentary. If we see, in the weekly commentary, we said this, right? I was like, I want to see the trade up into this fair value gap, and if we disrespect it, we're going for these highs. That's what I said, because we traded beneath that low. But yeah, do you not understand the point I'm trying to make about backtesting?
Yeah, 110%. I didn't like. I just thought it like when you said about like go through like for a year and find it open like
It's
well.
you. I know it's long. I know it's long, bro. But shall I tell you something? With these things, yeah, all the good things that people want to do. Listen, this mentorship is long. Don't tell me this mentorship is short.
Yeah, hey, this
80 plus videos. I don't know how many of you came from other mentorships or things. I don't think they have 50 videos with the length of the video. Do you see my point? Even this mentorship alone is not long. And the thing is, I promise you, I'm not saying in an arrogant way, but everything is here only if you're acting upon it. Do you see my point?
only if you
A
apply
lot of you,
yourself.
a lot of you can try and binge the content and whatnot. It's not going to do much for you because that's not learning. The OTE cheat code, there's a better example in the 4 hour. So you ran this out, right? You got the high and you displaced. That was market structure shift. So you're anticipating this to hold, right? At this low, you have this high, right? You have a high to run into your premium OTE, something like that. Ten-minute videos on models. The thing is, right? Models, don't get me wrong, models are important. You need to have specific models that you're aware of when they're playing out. It means shit if you can't read price. Because I'll tell you something like this, yeah. I can just trade an OTE retracement in line with my bias every single day. I don't need this fancy model bullshit that people use. Like everyone's got a new Wyckoff bullshit model or whatever it is. If you know what I said, yeah, going back to what I said on the DXY, where did I write that thing? If you know where price is, where it came from, and where it's likely to go, a retracement entry is more than enough to get in line with price. Knowing when the candles are going to print, that's, there's you lot in the mentorship, but that's the decision people gonna make. Do I just want to learn a model, which I don't know, or do I want to learn how the candles are gonna print? Because if you learn how the candles can print, it hits everything else on the head. A model can give you bias and direction. Whoa, you can get in the wrong way. Bro, a model is a factor of price. It has no narrative. This is the thing. It cannot give you, so the model needs context and bias for it to further solidify your bias, if you know what I mean. So I'll give you an example. A market maker buy model. A market maker buy model in a bullish context, knowing the narrative, can help frame your bias for whatever days it is. Because if you retraced and you're on the buy side of the buy model, and you've hit a fair value gap, a reclaimed order block, and now you're rejecting off of it, it's likely that the next days are going to be bullish based off that rejection. But just alone, something like this, that's not going to give you nothing. You can try it yourself. How can a model just give you a bias or not? In my opinion, it can't. Is a model going to tell you where interest rates are going? A model's not going to tell you what the Feds are going to likely to raise their interest rates. The model is a last thing you need to know. That's why it's a last thing taught in the mentorship. Any other questions? Touching on all the backtesting I did, yeah, it was a big emphasis. Make sure you guys do it. Become learners. You see, the only way you're going to get good, the way you're going to get levels in this thing is if you're taking on board what I'm saying. Start that backtesting, bro. Just do. If you do this, yeah, break it down. If you do 5 weeks, high of the week, low of the week, every single day, that's not a lot, by the way. That takes 10 minutes, 15 minutes max. If you do if you start from January the 1st, yeah, of 2021, and you do 5 weeks and you jot down if the week was bullish or bearish and what day made the high of the week and the low of the week, and you do that every single day, in 10 days, you have 50 weeks. You have nearly the whole year of price action done. Do you see my point? But it's just about doing it consistently. Go back from 2017, go as far back as you can and do it. I promise you the benefits, yeah, it's unrivaled doing it. And the high of the day and the low of the day, every single day, do that as well. Don't copy it from other people. Seeing it from another person and actually like doing it is different. It's like this. You see, if someone's doing something like a labor job or whatever, do you think you can get the same benefit of watching him doing it or you doing it yourself? How are you going to learn? You have to do it yourself, right? But any last question, or we're just going to wrap it up?
I think we're wrapping up, cause
Yeah. All right. 30, end the recording, please.
Thanks, Omar.
Nah, it's all good. It's all good.